What's going on, everybody? Hope you're doing well. My name is Lamont. I've been a full-time trader for going on 6 years now, and I'm a member of the Chart Guys team where I head up our futures room and, of course, the swing report along with Dan, Lori, and Joey. So, in this week's episode, let's get into a setup that I honestly think might be one of the best setups out there. If I challenge any of these viewers, any of you viewers, to show me a better setup. If it's yours or somebody else's, I don't care. Link me in the comments below if you know a setup better than this one. I invite you to back test it. I invite you to forward test it. You'll see. So last week, then this peak was one of our picks a few weeks ago from the September 25th or September 25th edition. And this was our original trade zone because the idea was looking for a daily lower high after this move down. Now, we did not get that move back into our trade zone. So unfortunately, we just didn't get that trade that week. But in the next week, which was last week, I saw that we had broken down under this all-time low resistance support. And that's why we were interested. We were interested in this name because we want to position for a potential all-time low break. Now, we did not get that all-time low break, but after we broke down under that prior support and then back tested it and rejected from it initially on this Friday here last week, and I'll include the idea that I shared last week, a snippet of it at the end of this video as is, tradition. The setup that I shared with our subscribers in our private group was, all right, well, if we have a setup on Monday today, if we have a setup under the point of control. So if we open up under the point of control of Monday and then roll back down under the open, you can sell that open. And then your first profit taking is this high volume area here. You can throw your stop over this high. And so if you were to do that, you see this, you sell it right away, you are very quickly in 1.13% profit. You're only ever risking 0.87% profit. So that's about a 1.5 R multiple. And then let's say that because we don't have any targets, this is black bear breakdown. After that trade gets going on this day, it advances 3% for you, first of all. And then it advances again on this day, another 2%, 2.75%. So let's say you're wondering, okay, well, how am I going to manage this trade now, right? You have this initial profit taking from here. Your stop is over here. You've already taken profits off here. And then let's say you see these 3 days where the market doesn't really do anything, where rather this asset doesn't really do anything, and you just get a little squirrely. At this point, you have such ease of convenience because your risk was so low and you've already paid for this trade with a stop over here. At this point, you're looking at another additional 5% gain, and your risk was only ever 0.77%. So you can pretty much throw your entire account at this trade, and you that would fit the vast majority of risk parameters, right? That nobody's uncomfortable with taking a 0.77% risk, right? I would throw my entire account at this at any opportunity because the loss is so small relative to the potential percent gains. You know what I mean? That's what you can't get anything better than that when it's a trader. So I mean, as a trader. So anyway, that's the setup, right? When you're looking for a daily lower high, if you have an open under the point of control, you move higher into the point of control, or you don't even test it and then roll back down under the open, that's a sell, right? Because the odds of that lower high being set are pretty good. And if it works out for you, it works out really well. If it doesn't work out for you, it doesn't really hurt you much at all. So it's one of the most asymmetrical trades that I have ever encountered. And it's something, I'm sure other people do it, but, I'm sure there are many variations of this setup, but this is one that I came about, myself. I haven't ever read anybody who's done it like this. So anyway, yeah, so I'm sharing it with you, and just know that whenever the context is for a potential daily lower high, and ideally there's even more context to make it even more juicy, which in this situation was the backtest of this all-time low, because obviously if these buyers can't get back over the all-time low, then where are they going to go? They're going to keep drilling lower, right? And if there's no support down here, so for all we know, it goes down to zero. I know nothing about this company, so I don't think that that would happen, but you never know. Anyway, so that's my bread and butter setup these days. I love it. I use it to day trade futures every day pretty much. And yeah, plenty of days I'll trade, multiple contracts both ways. And if it's a rotational day, they both might hit target. So anyway, it's good. So our next one is KMX, and KMX, we actually did that session to session setup twice in here and here. And even though these two worked out perfectly and the R multiple for those trades were good, unfortunately, those two were in here, and so we didn't see follow through on that. But if you're a subscriber and you use the zones, the zones like as a, your bigger picture, right? You don't really care about the minutia of this sideways stuff. You just like scale in on the strength if it's extended, and then if you see a move down, take some profits. So for KMX, then you'd like look at the hourly time frame or the half day time frame, and just as long as price is in the trade zone, this is how we would use our report. I mean, as long as price is extended, the hourly, the key time frame lower. So for the daily time frame is the hourly. As long as that's extended, then you can be looking to come into the trade zone. So you'd be getting fills here, you'd be getting fills here, for example. You wouldn't be in any of this stuff, right? But your stop is just over here. At the highs, you're probably getting in over here, etc. So you want to wait for RSI extension. I think if you're using the hourly, you can use the ETH. But if you're using the half day, I think you probably don't need that. You should probably just stick to the hourly with extended trading hours on for those RSI readings, or you can change the RSI reading to high. Anyway, so that's the idea, right? That setup is keen, and so the reason why I'm bringing up KMX again is we can look for that same setup if we see a daily bounce that doesn't take out this high. So if we start a move up here, and ideally it doesn't even take out this prior low, we can look for that same exact kind of a setup, session to session setup. So stay tuned for KMX and look out for it next week. So CRM now is starting to make a good amount of space. Now we've missed the opportunity to get this daily higher low, and in fact the session to session setup wouldn't even have been there for us, I believe. It would not have been. So that wouldn't have worked out anyway. So for CRM now, what I like to see is a move back over this guy. Make a lot of space over 198.49. Excuse me, a little sick. And then once the daily starts moving down to retrace, I'll look for a higher low. Ideally, we don't take back out this structure. So that's pretty much it. CRM is notable because it held this major low, this major structure over here, such that if you were to zoom into the weekly time frame, that's this guy over here. So if we're going to confirm this kind of head and shoulders and not see follow through, then we're probably looking at more balance. So I am still interested in CRM, but going to be patient on that. And then for Oracle is still looking for a potential weekly lower high. So if you're still in this play from that Oracle video, like, I don't know, a few weeks ago, it was the one that, we pretty much nailed this, right? We nailed this one, I believe. No. Oh, it was here. It was this one, right? So if you're still in from those initiations from here, your stop loss can be over here or over here. The most conservative stop loss would be here, right? Because our entries are all up here, And so if they get back into this structure, then that's a bit of a red flag for these sellers anyway. So if you want to protect their most capital, the most protective, you'll be here. And this one, we're still going to be looking out for this because there's a lot of space to set a weekly lower high under 127.42. So we'll let this weekly time frame bounce, and then eventually, once the weekly time frame tops out a little bit, if we see a move, if we don't take out the high, and then we see a big old move down on the daily time frame again, something like this or something like this, and then we'll look for that lower high play again, because if we reject from this all-time high resistance, then change the daily trend, right? That's probably a weekly lower high being set. So stay tuned for Oracle as well. And that's all I got for you this week. So appreciate you guys tuning in. If you found any of that interesting, you want to learn more, you want to get ideas every single week from me, ideas pretty regularly from Dan and Lori, occasionally from Funk as well, updates for all these trade ideas, including for the ideas that Dan has, access to educational videos. We have a swing report dashboard. You can always email me if you have questions. I'm always happy to answer them. Shout out to Joel. I see you are, studying really hard, trying to understand these concepts, ideally so you can, be more comfortable in executing them. I see you. I respect your hustle, sir. And I encourage anybody who's trying to learn these concepts to reach out. We appreciate you sharing some of your time and energy with me. If you could give us a like and subscribe, that would be awesome. And I'll see y'all next week. Farewell. Or even to open here, and then we just start seeing rallying over the value area high. Okay, we'll be patient on this one peak. But if we do have a setup where we're under here, like under the today's low day, Friday's low day, then I am very interested in, especially if it's a gap down. If it's a gap down and then we get an incomplete gap fill and then roll back down under the open, I will sell that open and throw my stop over the high of the day, and then probably just try to get to like this 18 test or something like that. But that's pretty much it. So basically, peak is a pretty good candidate for play if we have a open on Monday that is has the potential to move value lower. And by that I mean we will be opening under 18.36, ideally under 18.31, ideally under this low, 18.24. Okay, so no later than 18.36. So stay tuned for that on Monday. CPRT was